Good morning friends, welcome to SNRJ Investment Academy. Today we will be discussing about HDFC Smallcap Fund Direct Growth Plan. This fund is showing negative returns only since last 3 years. So before that it was a very good performing fund and many investors have already invested and running SIP in this fund. So we need, at this point of time when the coronavirus issue hit the market and economic crisis is showing up, what is the review of this fund that we are going to do, and what strategy we need to apply in this fund, whether we need to withdraw our money or we need to hold the SIPs or we need to continue our SIP. All those things we will be discussing, and we will be discussing it the fund performance right now. Historically speaking, the fund was performing very well last 10 years history if you are checking, and the fund belongs to a very good reputed fund house, and the fund performance also was very good. But right now last 2-3 years the fund performance is not up to the benchmark, so that makes some kind of questions regarding the performance of this fund. So we'll be going to the detailed review of this fund. HDFC Small Cap Fund Direct Plan. This is a growth option, and the NAV of this fund as on 21st May 2020 is 29.484. It is currently having a CRISIL rating of 3 star. If you can see the returns of this fund, for the 5 years annualized return is only 2.7%, and for 3 years, 2 years, 1 year it is showing a negative 7.9 annualized return, minus 21.3 for 2 years annualized return, and for 1 year 34.7 minus. So negative returns are showing for all 1, 2, 3 years, and only for 5 years it is showing positive return, but that's only 2.7%. This is the current status of this fund, and NAV 52 week high was 47.54 and 52 week low is 26.22. Currently the NAV is trading near to its 52 week low. So we need to analyze how the fund performance and what kind of return it can give in coming days. Since the current market is trading at a very low level and there are so many issues, economic issues, all the small cap funds are showing negative returns only. But when we are comparing a particular fund, we need to compare its fund performance with its index, benchmark index. So we'll be checking what is the benchmark index for this fund. The benchmark is BSE 200, S&P BSE 200. So we'll be comparing this fund benchmark with this fund's performance. If you can see, for 3 years minus 7.9, 2 years minus 21, and 1 year minus 34. The BSE 200 benchmark shows returns of 3 years 6.10, minus 6.10, 2 years minus 15.5%, and 1 year minus 21.10. Means the fund index, benchmark index is performing well compared to this fund, and the fund is performing very below this its benchmark, which clearly shows how the fund performance is. It is very low compared to its benchmark. So right now we need to plan a strategy what we need to do. We have 3 categories of investors, which are first one is the investors which are already invested in this fund and they are running a SIP. Those investors, what they need to do. And second category is that the investors which are invested lump sum amount, but they are not running currently any SIP but planning to invest. And third category of investors are new investors which are who are planning to invest in this fund. So for the first category of investors who have already SIP in this fund, they should continue their SIP. It's not time for them to hold the SIP or withdraw their money. They need to continue their SIP and they get the full benefit of averaging. So they need to continue the SIP, and once the issues are, or the market issues are cleared and markets bounce back and the economy is reviving, that time they need to again compare the fund performance with its benchmark, then identify whether the fund is lagging in the positive returns also. In that case, when they show some positive returns for analyzed returns for their investment, they can consider switching this fund. Otherwise, if the performance is satisfactory, then they can continue their SIP. But one thing they need to ensure that once Nifty is touching above 12,000, they need to stop their SIP and hold for further return. No need to invest when the Nifty is trading at higher level. That will result in losses only. So they need to invest when the Nifty is trading at low level, and they need to stop the investment when Nifty is crossing 12,000. Above 12,000, they need to stop and hold on to this fund, and when they are getting 25 to 30% of return, they need to consider switching, or they need to consider withdrawing some part of the money so that they can get a good return. The investors who are already invested and not running any SIP and planning to invest, they can divide their lump sum amount into 5 levels, and they can invest when the NAV is going again touching 52-week low. So means that you can invest right now one portion at NAV 30, and some portion you can invest when the NAV reach 25, then some portion you can invest when the NAV reach 20. So like that you can plan, and you can plan your investment over 5 or more parts, so that all the money you will not be investing at a single NAV. The other category of investor who are new to this fund and they not yet invested, they can compare other funds in the same category, small cap funds. There are so many other funds which are performing very well and having result rating 4-star and 5-star. I will recommend SBI small cap fund, which is having good rating and are showing good returns compared to this fund. So you can compare and you can invest. 5-star rating is there for Axis small cap fund also. You can compare and you can take a decision. This fund was performing very well 2-3 years before, but after that it started showing low returns compared to other fund, and even though the fund house is very good, you can see that fund is not performing, not beating its benchmark also. So in that case, there is the fund should be kept in under wait and watch mode, and you need to you should not invest. If you are a new investor, you should not invest right now in this fund. You need to compare the performance with other funds and then take a call accordingly. I have explained you all 3 categories of people how you need to invest. For the investors who are already invested and running an SIP, you should not bother about switching or withdrawing. You should continue to take the benefit of current situation. And those investors who already invested and want to accumulate more and plan to invest in a lump sum amount, then you need to divide your investment over a number of investment portion, and then accordingly you can part by part you can accumulate the units of this fund. And if you can see the portfolio of this fund, you can see technology sector 12.75, engineering 12.29, banking sector 10.12. It is expected that banking sector will show further more corrections in coming days due to economic crisis. The fund performance also may be going down only because of this exposure to banking and finance sector, but the fund kept the exposure to 10% only, not having higher exposure. But still it is a very concern for the investors. But those kind of situation will help you to accumulate more units of this fund. And but The thing is that you need to have a very long horizon if you are investing in small cap funds, because investment horizon for more than 5 years you need to have. Then only you, at least you will see some kind of positive signals if the economic crisis is going on, and the time it will the economy will take time for reviving. In that case, the 5 years horizon should be there. 5 to 10 years investment horizon you need to consider. I would recommend you should not invest if money is required, if the investment money is required for you to some other investment. If you want those money within 5 years, you should not invest in small cap funds. If you only those amount which you require after 10 years, that's the amount, or that amount only you need to invest right now. Otherwise your money will be stuck, and you will be withdrawing your money when the fund is showing negative returns, which is actually not good for your overall growth. If you can see the 5-year chart of this fund, the whatever SIP amounts you have invested during 2017 to 2020 January, up to March, all those investment will be showing negative returns only. That's why I am recommending that you should not invest when the market is trading at higher level. So you can take a benchmark as Nifty. If the Nifty is crossing 12,000 level, you should not do any kind of investment, including SIP. You need to hold your SIP, and you should continue only whatever investment you have done. And you can, if the market is giving good return, if the fund is giving good return around 25 to 30% of annualized return, or then you can considering booking some portion of that profit, so that when the market is again getting corrected, then you can reinvest that amount in this same fund. So that is why I am telling you, you should not, you need to consider holding your SIP investment when market is trading at very high level. Hope this video was helpful for you. If yes, please click the like button and subscribe to our channel for more such videos. Thank you.